Imagine you bought a house in 2022, but here comes 2026 and it's worth less than what you paid for, or your stock portfolio hits all-time highs in 2026, but then it drops by 20 to 30% a year later. What would you do? Right now, some of the biggest forces in finance, which includes interest rates, inflation, Fed, demographic, and tech, are colliding. And what could happen next could change everything. Today, we're going to be breaking down why real estate might fall in the year 2026 and stocks could follow. So keep watching. Let's start off with the housing market. People always say real estate never loses value, but is that true anymore? From 2020 to 2022, home prices have soared. Cheap money, remote work, and FOMO drove bidding wars across the country. There are 7 major pressures building up in this economical environment. So let's break down the first one. Let's talk about the high interest rates. The higher the interest rates, the less buying power the citizens have. Mortgage rates have been doubling since 2021. Just a 1% rise in interest rates can add hundreds of monthly payments. The higher the interest rates, the fewer the buyers, the fewer the offers, equals out to falling prices. And those falling prices, you can see it all over Zillow. You can see it in the housing market. And it shows because the real estate market has been falling down 5 to 10% just in this 1 year, because there are more houses on the market now than ever before. People do not have any money to spare. They're missing car payments. They're missing the payments that they need to make on a monthly basis. Number 2, pandemic could be a bubble. Prices jumped way too fast, way too quick. Some cities are still overvalued at this time. When bubbles inflate too fast, you know what's coming next. During the COVID rise of stocks and real estate, the government printed free money, artificial money that was inflated into these markets, which artificially pumped the value of real estate and stocks. So I think the real estate market will crash very soon in 2026, and the same goes for stocks. Number 3, boomers will start selling their real estate and stocks in the year 2026. By year 2026, many boomers will be downsizing or passing away. They own most homes outright and they will sell no matter what. Inventory spikes, especially in suburbs. Number 4, builders catching up. Post-COVID construction is finally hitting the market. There's a lot of oversupply in the real estate market nowadays, and you see everyone starting to panic. There's more inventory and they have no buyers whatsoever. This is the reason why real estate keeps declining on a quarterly basis this year. Number 5, job losses or recession is going to equal out to panic selling. If AI starts eating up everyone's jobs, people are not going to be able to afford their monthly mortgage payment. Even a small wave of layoffs could shake the whole entire housing market. Number 6, support programs are gone. No more forbearance, eviction bans, or COVID stimulus packages. That is out of the game. Adjustable rate mortgages are resetting and the monthly payments will be jumping. Number 7, Airbnb and investor sell-off. Investors bought a lot of homes in the year 2020 to 2022, and now their cash flows are drying up and they need to offload quickly before everything starts flooding the market and they have no buyers whatsoever. If cash flow dries up, they need to offload really quickly, and that will flood the market and panic will settle in. So is this a 2008 repeat? Probably not, but could we see a regional pullback or a soft crash? Very possible, especially in cities like Boise, Idaho, Austin, Texas, Las Vegas, and Phoenix, Arizona. So what happens if real estate keeps on falling, but your 401k and stocks are up by 30% from AI and tech hype? Stocks have been going up since the bear market of 2022, but here's one thing that you should know about the stock market. The calm before the storm always looks like another sunny day. So let's go over the reason as to why stocks will be crashing in the year 2026. The Feds have been increasing interest rates in 2020 to 2023. The damage takes time to show up in the real estate and stock market. By 2026, the delayed effects will finally start showing up, which is going to include credit tightening, lower earnings, and defaults. Stocks are very expensive right now. Tech PE ratios are very stretched out. If earnings slow down even a little, the bubble could deflate, and this is going to lead to another panic selling in the stock market. The markets are expecting a rate cut by late 2025, but if inflation sticks around and the Fed doesn't cut the rate, that could lead to a very hard slam for growth stocks. And we cannot forget the year 2026 is going to be the midterm elections, so that will shake up the market a lot. Add Taiwan, Ukraine, and cybersecurity risk, that will add to the volatility, which will lead up to the real estate and stock market crash in 2026. Tech earnings across the board have been plateauing. AI helped slash cost and boost margins, but can it keep the revenue growing? If not, investors are going to be getting cold feet and they will panic sell and run away from investing more into a company. Now here's the twist. It's not all doom and gloom. There's a real chance stocks might stay strong even in 2026. But only time will tell. The Fed cuts rates as inflation cools down. That will produce a rally in the stock market or the real estate market. So 2026 might be a correction or the start of the next bull run. It all depends on how these forces will play out. And let's not forget about the Buffett indicator. What is the Buffett indicator telling us about today's stock market? Let me tell you about the Buffett indicator, a metric used by the greatest investor out there, Warren Buffett. He uses this metric to judge if the stock market is very overvalued. The Warren Buffett indicator compares the whole valuation of the stock market to the state's GDP. If stocks are worth more than the entire economy, something's off. In 2025, the Buffett indicator is flashing red, higher than before dot-com crash in 2008. The Warren Buffett indicator will not tell you when the market will turn, but when the market is inflated, history has shown us that it will not last forever. So what does this all mean for you? Real estate could be getting a major pullback in 2026. Mortgage rates are still high. Boomers will be selling out a lot. Supply is outpacing demand. The economy is slowing down because of inflation. Stocks could also fall if a recession hits. Earnings have been disappointing over and over again. Valuations prove to be too ambitious and everything is too overvalued. So as an investor, you should always do your due diligence and make sure you're making the right move at the right time. So I hope this video provided you guys with a lot of information, and I will see you in the next video.